So, what if the key to solving our housing crisis wasn't some huge new government program, but actually just a simple tweak to banking law? Today, we're going to dig into a pretty radical idea that could unlock trillions, yes, trillions of dollars to build the homes we so desperately need. Let's get into it. It seems so obvious, right? On one hand, you've got banks sitting on mountains of capital. On the other, a massive shortage of affordable housing. So, why can't one solve the other? What's the holdup? Well, as we're about to see, the roadblock is a system so incredibly complex, it's basically tripping over its own feet. All right, so before we can really appreciate the new idea, we have to understand the problem. And when it comes to financing affordable housing today, the system we have in place is, well, it's a bureaucratic maze, to put it lightly. The main tool we use for this is something called the Low-Income Housing Tax Credit. A mouthful, I know, so we'll just call it LIHC. Now, the name sounds simple enough, but in reality, it's a tangled web of regulations that adds a ton of cost and complication to every single project. Okay, just look at this journey. It's a trip. The IRS hands out tax credits to states. The states then create these super dense plans to give them out. Then, get this, developers can't just use them. They have to sell them to investors, usually through middlemen called syndicators, who package the whole deal and, of course, take a nice cut. You've got layers of lawyers, consultants, hundreds of pages of compliance manuals, and the result of all this? A process that is painfully slow and expensive, often bogging a project down for years before a single shovel ever hits the dirt. So, if the current system is a maze, what's the alternative? Well, what if there was a straight line right through it? Let's take a look at a proposal that does exactly that. It charts a much more direct path. The whole idea really hinges on three key changes. First, you just amend the Bank Holding Company Act to say, hey banks, you're allowed to develop affordable housing. Simple. Second, you let them create specialized separate subsidiaries to do the building. That way, you insulate the main bank from any project risk. And third, and this is a big one, you update the Community Reinvestment Act to give banks the most credit for actually physically building new homes, not just financing them. Now, a huge part of this is figuring out what affordable even means. We do that using a metric called Area Median Income, or AMI. This proposal suggests bumping up those income limits just a little bit. That small change would open up these homes to way more families. Think about people like teachers, nurses, and first responders who are so often priced out of the very communities they serve. And you might be thinking, this sounds interesting, but is it just a wild theory? Well, nope. It's actually already happening on a smaller scale. States like Virginia and Michigan already let their state-chartered banks invest directly in real estate. So we have proof of concept that this can absolutely work and be managed safely. So why go through all this trouble? What's the real payoff here? Well, it all comes down to two big things: unlocking a massive amount of capital and making the entire process way more efficient. The biggest game changer is just the sheer amount of money we're talking about. The US banking sector is sitting on trillions of dollars. It's like having a giant reservoir of water right next to a desert. If we could channel even a tiny fraction of that into housing, it would completely revolutionize development and provide a steady stream of funding that the tax credit market just can't manage. I mean, just look at this comparison. It's night and day, really. On one side, you have the current LIHTC system. It's a bureaucratic traffic jam. It's tangled, slow, and expensive. On the other side, you have this proposed model, a clear, open highway. You cut out the middlemen, you slash transaction costs, and you get homes built for people so much faster. And here's the thing that just makes so much sense. Banks are already experts at this stuff. They live and breathe real estate finance, risk management, all of it. This proposal isn't asking them to learn a totally new skill. It's just letting them apply the expertise they already have directly to building and managing projects themselves. And all of this leads to what is, honestly, the most powerful part of this whole idea. It's not just a change in process. It's a fundamental change in perspective. It's a total mindset shift. This quote right here absolutely nails it. For most banks today, affordable housing is just a chore. It's a compliance burden, a regulatory box they have to check. This proposal flips that script completely. By allowing banks to actually earn a return and build equity in the projects they create, you transform that headache into a genuine strategic business opportunity. And that right there is the secret sauce. When you can align what society needs with a good business reason to do it, that's when you get real momentum. Suddenly, banks have a powerful incentive to push for these reforms themselves. They become active partners in solving the housing crisis, not just, reluctant participants. So it really leaves you with a powerful question to think about. Could a simple, targeted change in banking law be way more effective than another complicated government program? This proposal suggests it just might be the key to unlocking the capital, the expertise, and, maybe most importantly, the will to finally, truly tackle our affordable housing crisis.